Hi, Assalamualaikum. My name is Nur Alia Nabila binti Zaidi. My metric number is A24A3130. Today, I want to explain about monetary and fiscal policy. So, monetary policy is handling by Bank Negara Malaysia, which is BNM. It can control money supply and interest rate to keep the economy stable. And then fiscal policy. Fiscal policy is handling by the government. It uses tax and spending to manage the economy and support people welfare. So both of politics can work together to keep the economy stable and improve people's life. Thank you.
Hi and Assalamualaikum. My name is Molina Nur Ain and my metric number is A24A3427. Today I will be presenting the objectives of monetary policy. The first one that we have is inflation. Monetary policies are often used to target the inflation levels. If the inflation level is low, then the economy is considered to be healthy, but if the inflation is high, then a contractionary policy can deal with this issue. Second is unemployment. The level of unemployment in the economy is influenced by the monetary policies. It can be quite effective, especially if we want to address unemployment by influencing firms' investment decision. If the interest rates are lowered, then central banks have the authorities to reduce the cost that is borrowed by any businesses, which will make it cheaper for the businesses to finance any investment projects. Third one and the last one is currency exchange rates. Any central banks can control or even adjust the rates between the domestic and also foreign currencies using its fiscal authorities. For example, one of the ways the central bank can do is by issuing more currency, and under those circumstances, the domestic currency will be cheaper relative to its foreign counterparts. That is all from me. Thank you.
Hi, my name is Nanisa Fira binti Azmi. My number metric is A24A3446. Next, I will explain about the expansionary monetary policy. This policy is about implemented when the economy is slowing down or facing recession. Under this policy, Bank Negara Malaysia will reduce the interest rate or OPR. Lower interest rate encourage consumer and businesses to borrow money for spending and investment. As a result, consumer spending, business activities and job opportunities will increase. Therefore, this policy help to stimulate economic growth and improve the overall economy.
Hi, my name is Kamini Vijayan. My metric number is 848292. Now I am going to explain about the expansionary fiscal policy. This policy used by the government to stimulate economic growth during period of recession, slow economic activity or high unemployment. Under this policy, the government will increase its spending or reduce the taxes. It is because when the government increases spending on projects like infrastructure development, education, healthcare and public services, this will create more jobs and people will start to earn high incomes. At the same time, the government will may reduce the taxes because the lower taxes increase disposable incomes for household and allow businesses to retain more profit from it. As a result of it, aggregate demand in the economy will increase and help to reduce unemployment in the country. In the end, this policy will improve people's welfare and living standard in the country.
Hi everyone, my name is Sharon. My matrix number is A24A3796. Today, I will explain the monetary policy instrument used to reduce the inflation. First is the increase in the overnight policy rates or OPR. When interest rate increase, borrowing become more expensive. As a result, people and business will reduce the spending and borrowing. This can help to lower inflation in the economy. Second is the control of credit and loans. Bank Negara Malaysia can limit the bank reading to reduce the money supply in the economy. When there is less money circulating in the market, demand will decrease and inflation can be controlled. Lastly is the management of exchange rates. A stronger currency can lower the price of import goods. This can help to reduce the inflation, especially in Malaysia, because Malaysia import many goods from other countries. Import of Malaysia is over 65 million regarding a year. In conclusion, this monetary policy instrument can help to reduce the inflation by controlling spending, reducing money supply, and stabilizing the price.
The function of Bank Negara Malaysia is for managing monetary policy. Their main goal is to keep price level. They do primarily by setting overnight policy rates. By moving interest rates up or down, they can control inflation and make sure the economy grows at steady pace and preventing the thing from becoming too expensive for every person. Second point, the bank declarer acts as supervisor of the financial system, act as traffic police for banks and insurance companies. They set a strict rules to make sure these institutions are safe and honest. If bank ever face a major crisis, bank declarer acts as the lender of last resort that providing emergency funds to prevent the entire system from crashing. Point number three, bank declarer only authority allowed to issue currency. Every ringgit note and coin are produced and managed by them, not just printing money. They also manage Malaysia International Reserve. This is like the country's saving account in foreign currency, which help protect the value of ringgit against global shifts. Final point, last point, bank declarer serves as the banker and advisor to government. They help the government manage debt and provide expert advice on the economic policy. Even though they work closely with the government, they remain independent to ensure that their financial decisions are always based on what is better for the country's long-term stability.
Next, I will explain about impact on growth rate. Monetary policy affect economic growth by influencing interest rate, inflation, borrowing, investment and exchange rate. Based on the article, Malaysia's monetary policy, especially changes in the overnight policy rate (OPR) by Bank Negara Malaysia, plays an important role in determining the country's growth rate. Interest rate and borrowing. When the central bank raised the OPR, commercial banks usually increase lending rates. Higher borrowing costs make loans for business and household more expensive. This will affect business to reduce investment and expansion activities. Consumers will spend less on houses, cars, and other goods. Also, economic growth may slow down due to lower demand. The article mentions concern that people may feel pressured by rising OPR because it will increase financial burden. On the other hand, lower interest rates encourage borrowing and spending, stimulating economic growth.